Hello and welcome to another update video about VeChain. VeChain is overall really holding well in this current correction, in this wave 2 correction that we're tracking and have been tracking. And as per the last video, we highlighted that the price ideally would test at least the 3.182 cent level. That's sort of the next, let's say the next key level to watch here on the chart. It's a 38.2 retracement. And as I said, the next ideal target here on the chart, because it's the first level of the larger support zone for our yellow wave count. And the yellow count is the preferred scenario. Overall, they have to be considered both, but the yellow count would look better. In this yellow scenario, the market formed a 5-wave rally from the June lows to the upside. And then here a 3-wave pullback into support. And then from here, a 3rd wave rally could begin. However, at the moment, the price is still moving in this corrective price channel. It at the moment looks like a normal consolidation. The trend is down from the March highs, actually the February highs. Okay, you could say the March high. The trend is down. It has been printing lower lows and lower highs. But we are far away from any critical level. I mean, we're far away from any level like for example, Matic. I made a video earlier today, which is basically already at the 78.6 fib level down there. So VeChain overall has been holding really well. Really well, even though the correction looks really messy. But that's what corrections do, right? So the next support levels, okay, so I have to expect at the moment the price goes down a little bit further. I mentioned, by the way, in the last video that the structure of this correction is considered a W, X, Y pattern. And then in the Y wave, we have an A, B, C. And this B wave could be a triangle. And the C wave to the downside is basically unfolding now. The white box here shows a Fibonacci extension targets for the Y wave. So that's basically the next level is 3.3 cents. Then 3.12 and 2.83. Just some additional levels to watch. Not super reliable, but just some additional levels to watch. And then below that level, we've got 2.7 cents, which is again another Fibonacci retracement level. If this is white wave 2, which is a smaller degree wave 2 in a large ABC structure, or if this is a large 1-2 setup, that's at the moment unknown. But as I said, the yellow count is at the moment preferred, but it doesn't make a great difference. The only thing is that below the red line, the white count will be invalidated, but the yellow one will still remain intact. Basically, I have to assume that we continue to follow this correction until the price breaks out of this corrective price channel to the upside. At the moment, we're still sort of hovering above the support zone, hovering within the corrective price channel, and a break above the upper boundary line would be good confirmation that the correction is over. And it's minimally would take a break above that 3.88 cent level. That's the last swing high to suggest the low is in. It obviously takes a little bit more than that, but that is sort of the first, as I said, the first indication, right? And followed by that, a break above the end of this triangle. I am counting, as I said, this correction as a WXY and then A, B, C, and the B wave here as a triangle. I mentioned that yesterday. It actually counts quite nicely as a triangle, a B wave triangle. And yeah, we would be in this C wave now, which might be an ending diagonal. So there might be a few more adjustments to the downside needed before we continue to complete this correction. Technically, we have enough waves. Maybe on the micro level, it would be nice to have some, maybe 1 or 2 more lows here. Basically a series of lower lows, lower lows and lower highs to complete this correction at some point. But then there is no low in place until we get a first impulse to the upside, followed by a 3-wave pullback, and that first impulse ideally breaks out of this corrective price channel, as I said. Next upside targets, maybe we should talk about them as well. That would be for the larger degree 3rd wave. How do we determine those? We have to go to the maybe I go to the long-term chart. Let's go to the VET long-term chart. That gives us a good idea of the bigger picture. And so let me just adjust that. I do need to swap colors here, so don't get confused. Actually, what is here, the white count is the yellow count on the other one. Maybe we'll just do that now, because otherwise it will get very confusing. So this is obviously just a sort of long term that gives us a good idea of the overarching bigger picture. And if we talk about, okay, look, we had a wave 1 to the upside, and this is a wave 2 pullback. Again, I have no low in place, so I can't really confirm where the upside targets will be, because I need a low to define them. But even if we just assume the price might test the 50% FIB level, so it might be quite conservative, then we're looking for the 1.38 extension as first ideal target to the upside. And this is the 19-cent level. So that's quite ambitious. So I would be naturally a bit skeptical about that, but that is what the projection shows. Condition is that we are turning around before breaking below 2.7 cents and generate an impulse to the upside. So that's what I'm tracking at the moment. Overall, there is a bearish scenario as well, which would be that this here is just a corrective rally. Wave 1 to the downside, A, B, C. But still, even then, we should see further upside going forward in this bull market, especially as long as the 1.82 cent level is holding, which is the critical support level really for continuation of the bull market. And whether that's in a third wave rally or just a C wave in a large ABC structure, that remains to be seen. That's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.